Next on today's show, we welcome back from Willis and Jurasek CPAs and Consultants with Tax Talk, CPA Kyle Luttig. Hi, Kyle.
Hey, Bart.
Good to see you.
You as always.
Home there, your future neighbor will be living someday.
Hey, you never know.
Well, we're getting close. 3 weeks, just about, till. How are you holding up?
Oh, we're still cooking, so we're still pushing returns out. We're trying to get our clients get their documents in to avoid any extensions, which always a possibility, but we don't like to if we don't have to. So
yeah, so extensions are really, you advise clients to avoid extensions.
Mm-hmm. Yep. So you can extend your return, but if you owe on the return, the tax is still due April 18th this year. But that's a big common misconception. Is like, oh yeah, I can just extend my return for another 6 months. Well, if you owe with that return, like I said, it's still the money's due. Otherwise, you got some penalty and interest going on. But we really try not to extend if we can help it.
Well, you're working on taxes for the 2021 tax year, which ended 12/31. But is there anything that people can do now that would affect their tax filing for this past year?
Yep. So there's still a few things that you can do kind of retroactively. The biggest thing are IRA contributions. So there's a couple different IRA options out there. You got a Roth or you got a traditional. A traditional IRA, you can actually, if you qualify based off of income, it could be a deductible contribution. So that means, if you could put up to $7,000 per person. The rule's a little bit different for some of the older folks, but you could put that $7,000 in, and it can be a tax deduction for you, even retroactively back into 21. So a lot of people think like, oh, I missed the deadline. Well, no, you really haven't yet, and the IRS lets you do that because you may not know your income until the end of the year, so they give you a little bit of leeway there. So
people are required to report at the end of the year. They have till the end of January. Even I think there's even later deadlines. So people might even be waiting till late February to really know anything.
Yeah, if you've got brokerage statements for 1099s, interest and dividends, those always kind of come. Seems like in that late February time frame sometimes, or if you've got kind of some weird investments with publicly traded partnerships, a lot of times they don't even issue those until May or June. So those ones you kind of look at extensions, and you kind of a lot of times they'll send out estimates of what they think the return will look like, but. There's a lot of moving parts with some people's personal returns.
Are you getting enough to sleep? Enough to eat? Are you getting enough sleep?
Well, yes to both, I think. Every day gets a little bit harder and harder to get up when the alarm goes off at 4:30. But no, we're still rolling. So
he is. Kyle is JTV's CPA and also ours personally, and I get emails like 2 a.m. on Sunday. You never stop.
Yeah, Brian, the managing partner, as you know, we always joke that we have 24/7 coverage because he likes to work, really late into the night, and I'll work right in the morning. So every now and then we'll overlap a little bit, and so we get round-the-clock coverage. But no, we like servicing our clients, and that's most important to us. So that's what we're here for.
Yep, you do a great job. All right, so one thing I haven't heard much about, IRS, with their shortage of staff and all that, are we less likely to be audited?
And so the chance is always there, obviously. A lot of people always try to make their returns audit-proof, but, some returns are just, they'll pick a random number, and if it's your number, then, you're up to bat. But I did pull some statistics from the 2020 fiscal year from the IRS, and it seems audit rates are down, which not surprisingly, but of the 240 million returns that were filed for 2020, just about 500,000 returns were audited. Seems like a high number, but as a percentage, that's 0.2%. So the chance is extremely low. And the other common misconception is people think, oh, the IRS is going to come knocking on my door. Well, no, not even a lot, but most of their audits are just correspondence. They'll send you a letter in the mail saying, hey, we want some more information. Can you send this over type thing? There are some bigger audits where they've got, an actual agent that'll come out, they'll send you a letter first. They're not just going to show up unannounced, but they'll come out, go through your stuff, and kind of do a field audit is what they call them. But then they sent out, I think it was 1.2 million math correction notices. People with fat fingered a number on a return, or just transposed a number type thing. So those ones are the kind of the easy ones for them. It's all computer generated type things. But the most interesting fact that I found was, of the 240 million returns that they received, they didn't flag them, but they recommended audits for 13 million. So they actually audited 500,000, but they marked 13 million of them to be audited. So I'm kind of curious to see how that shakes out. Are they just kind of kicking that can down the road, or are they saying like, hey, we kind of did what we could do type thing? So we won't really know that until the next few years. But just kind of some interesting facts there.
How far back do they go?
They can go 3 years.
Oh.
3 years.
And so they won't pull up in a black SUV and ask for office space for a couple weeks, or
No, not unless you've got some really shady stuff going on. But no, that's usually you're just getting a letter in the mail saying, hey, your account has been selected for audit. Kind of here's what they want. Here's the timeline to comply. Here's the agent that's assigned to your account. That kind of thing.
Are there certain red flags that are more likely to trigger attention from the IRS?
They use a lot of ratios. If you have $100,000 of revenue and you show $70,000 of advertising expense, well, they're going to say, well, okay, what are you kind of spending that money on? But as far as saying like, yep, this one specific item is an instant audit, I wouldn't go that far. They've kind of got their realms. They'll look at mileage a lot of times if it's not kind of in the realm of what they think it should be. But they look at it from a higher level and then kind of dive into it from there.
A lot of gig economy workers, under the table pay. IRS, if you don't report that and it's not, and the employer doesn't report it, that's kind of hard to track, isn't it?
It is. A lot of times if you have an audit, they'll say, well, what is this on your bank statement? Well, and then it's like, oh, that was, a gift from grandma for my birthday. Can you prove that? Can you not? And then, a lot of it is, keeping those good records, saying like, hey, here's my numbers, and kind of going that route. But to track the cash is really hard. But as soon as it hits your bank statement, or a lot of people think like, oh yeah, I'm using Cash App or whatever, Venmo type thing. Well, that's practically a bank statement to them. So there's still a trail at that level.
What about NFTs and cryptocurrencies, and how does all that figure into?
Yeah. So there are special disclosures on the tax return that you have to report those. It's actually right on the front page of the return. Did you, have any interest in virtual currency? Yes or no? And then, how did you acquire those? Did you buy them? Did you mine them? There's the virtual currency stuff is so kind of out there that I'm not really sure the IRS knows what they want to do with it, but they want to kind of pinpoint those people that are involved with it, just to make sure that they aren't, trying to hide anything or anything to that level.
And people that wait till the last minute, late filers, do they attract any special attention?
Not necessarily, no. A lot of the times the late filers are either one of the procrastinators, or they've got a lot of moving parts on the returns, like those K1s and broker statements that we were talking about earlier. But a lot of times the IRS will kind of give some tips and tricks on, how do you stop your return from being held up? And some of the easy ones are like, well, e-file the return. If you're at home on TurboTax or whatever, it gives you the option, do you want to e-file it or do you want to paper file it? Well, I wouldn't necessarily want to send my return in the mail in today's days, just because how far back the IRS is their backlog is. So if you e-file it, that helps. If you want to get your money faster, there's an option to have a paper check or a direct deposit. The direct deposit's obviously going to be faster. And then just making sure you don't have any typos. Like, don't be part of those 1.2 million, math errors that they had to correct, because that's certainly going to hold up your return. So
Makes sense.
mm-hmm.
Well, I know you got a few more weeks, so late
Mhm.
nights and busy weekends. If people need any help, you guys are available for
Mhm.
Individuals,
Mm-hmm.
businesses, partnerships.
Yep, we do it all except for public companies. Those we don't get involved with those. But yeah, we'd love to talk to anybody that would like to sit down and have a chat.
Great. Thanks for taking time to be with us today.
Okay. Anytime, Bart. Thank you.
All right, good to see you, Kyle.
You too.
CPA from Willis and Jurasek, CPAs and consultants, Kyle Luttig. Got some birthdays to celebrate. The birthday club, follow